the actual thing to worry about right now are Japanese yields, dude. I think that's
Yeah.
something
Yes.
that is not doing the rounds right now.
Yes.
But we did discuss about this, I
Yes.
think, a couple of days back or maybe a week back or something. But that's the one which is a bit concerning right now because everyone sort of now the reason why they're selling old bonds, which is why yields are rising, and because yields are rising, central bank follows yields. So central bank will now have to issue
In
newer bonds at higher yields, which is how the spiral sort of
and
kicks
they'll
about.
also will have to increase sort of a little bit of interest rates as well.
Yeah. So that's what. So if
Yeah.
repo rate
Yeah.
increases, the yield will also increase
Yeah.
naturally. So newer bonds will be issued at higher interest rates. And I think, to be honest, to be honest, this entire problem is actually started by the US, right? Because the US has been in a QT scenario, right? Which is why every
Mm.
central bank has to adjust itself because by the end of the day, that's
Hmm.
the reserve dollar, right? That's the reserve currency of the world.
Yeah.
Because, so, I mean, look at it from this perspective, right? There is a huge cash carry trade going on, but look at the people who are borrowing from the yen and investing in global markets because global markets were in an upward trend, right?
Yeah.
And because the money printer was on in the US, it made sense for people to sort of borrow from here because people were sure that if the US rates are near zero, Japanese rates are also going to be at zero. So the only risk that you have is currency risk, right?
Hmm.
But because US started QT, that is what created a frenzy because now you're looking at a situation where I can anyway make a certain amount just by sort of I can make maybe like 4.5, 5%, or at a point of time it was 5.5, 6% even, just by holding US treasuries. So people are sort of dumping treasuries elsewhere and unnecessary क्यों लेना ये currency risk, right? Let me just go and
Yeah.
park money in the US. That was the psyche, which is why yields have been spiking up globally because like I mentioned on a previous cast or stream, that yields of older bonds will spike if people sell it, right?
Sell it.
Because the interest that you're making on the face value is going up. Now, how does the spiral start? Because at that particular point of time, what happens is central banks have to keep on issuing new treasury assets. Now, if they're issuing new treasury assets, those treasury assets will have to be benchmarked with the current prevalent market yield, which is why newer ones will also be sort of issued at higher interest rates, thereby sort of pushing the yield higher and higher. So I think
Yes.
the Japanese crisis is what we need to look at. And uh, people have been talking about this for a very, very long time. I think that bridge was Ray Dalio has been talking about it from a very, very long time. But it's all been started by the US. But I somehow feel if the US goes into full blown QE mode, now there's something that Japan needs to deal with right now. Sorry, I'm deviating a bit, but Japan now needs to deal with either a recession. They have to accept that it's a recession and they don't have no other option but to raise interest rates so that currency doesn't start flocking out. But
Yeah.
it's a little strange because people were earlier sort of borrowing in the yen anyway. Borrowing in the yen anyway, and money was anyway sort of moving out. But they are now trying to hold money in. So I don't get that entire situation. But again, it's central bank mathematics. But what they now need to look at is either they have to accept that they are going into a recession or they have to accept higher inflation, right?
I
And
think
by
I think
inflation,
they
I think they
are.
have to accept 3 to 5% inflation right now, which is something that the US is coming to terms with. Like now, the US days of 0% inflation are gone.
Mm.
For them,
Yeah.
Hmm.
2 to 3% is going to be the new norm. But I kind of feel if
Exactly.
the US now goes, I think the world is soon going to shift to this mechanism. Is that high inflation is here to stay? Fuck it, let's open the printers. And the moment the US starts printing, I think Japan will also start stabilizing and they'll start lowering down their interest rates again.
Mm.
Yeah.
But
Yeah.
that's the thing to focus on right now.
Yeah.
Not jobless claims, nothing else. I mean, I think that is a. I mean, like we discussed earlier, unless or until the 2 year bond doesn't breach a particular mark, we don't need to worry. That's what I had said in a previous.
What is that mark according to you?
I kind of feel that
अभी
mark
क्या
was around.
3.96% चल रहा है ना कितना?
Abhi, I think it's at 1.9,
अच्छा
1.9%, but
$1.9.
yeah, I think it's inching more and more towards that 2% mark. I had mentioned that 2% is the spot to sort of get worried. And the moment Japan in its December Fed meet increases interest rates, newer bonds will automatically get repriced. So if
Got it.
that 2% mark gets breached, I think that's going to become a point of at least
Mm.
concern, and not I don't mean systemic concern because the world has already faced an Asian financial crisis, right? Which was back in the 80s
Yeah.
and 90s. Right? Same things don't repeat themselves in the markets. What the markets essentially do is when they have an old event and they see something new which matches historical facts, they quickly discount that because they know how to
Countermeasures, yeah.
discount it now. The
Yeah.
market hates uncertainty, right? That's what the market hates. So if these things are not uncertain things, to be honest, I mean, an interest rate crisis is not an uncertain thing because the market knows how to discount it. So even at 2%, if we hit that mark, I think the market is going to discount that sort of an event very, very quickly.